Hello, everyone. Welcome to the Mortgage Leadership Outlook. Let's get the mic out of the way. All right, there you go. Mortgage Leadership Outlook. Andrew Berman, National Mortgage Professional Magazine, Mortgage News Network, coming to you from the M&N Studios here in my basement. That's right. We've got a little spackle and paint. Make it what it ain't, as our producer always used to say. Let's take off my glasses here. Anyway, super excited to have Kevin Peranio, KP, the Chief Lending Officer for PRMG. So he's just right now running up to his office. He just connected. So give me a minute while we bring him on there. I think I actually hear him. Oh, Kevin, you're here. He's there. There he is.
I'm here, right, brother. No way I'd let a great intro like that flop, man. That was awesome. You're the hype man. I love it.
Thanks, man. I appreciate it. But listen, we want to see your pretty face too. So you get up actually into your office. He's running around. So he is in Corona, California. Now, So
the irony of that right now. Jeez.
really is just amazing. So listen, by the way, if you are joining us now, please share this, get this message out there. We want to make sure that Kevin Peranio feels the love. So please share this. Tag people, let people know that we are live with Kevin. Kevin will be showing his face in just a minute or two. We can still hear his voice right now. But listen, this has been an unbelievable exploration of meeting with great leaders like Kevin. Tomorrow we have Ted Tozer's going to be joining us, former head of Ginnie Mae. He's going to be sharing with us some insights about how private label securities need to self-regulate. So we're going to be some interesting insights on that next week. Oh, my goodness. So excited. Next week, we've got Angel Oaks. Tom Hutchins is going to be joining us on Monday. As many people know, Angel Oak has resumed lending. We got RCN's president that's going to be joining up on Tuesday next week. Got a couple of other surprises for you next week, but really excited. So today, I'm really excited to introduce Kevin Peranio. Kevin Peranio, it was someone actually, Kevin, and I don't know if you're close to your office yet, because I'd like to bring you on camera as soon as we can, but been amazing to watch Kevin's, journey and just, skyrocket into the executives, into the C-suite of a major lender like PRMG. It's been, from following you around, when you were, Kevin, I believe when you and I first met, you were like a regional in Florida, right, for PRMG? Oh, I think I muted him. Hold on for a second. And do we have Kevin? Okay. Kevin, are you with us yet? We don't have Kevin yet. Okay. He'll be with us shortly.
You do have me.
There we go.
You got me live. You got me live. How are you?
Fantastic. Do we get to see your pretty face yet? Are you in your office?
You mean the studio? The studio in Corona, California?
That's right.
Where I work all my late nights.
Yeah.
It's not quite as memorable and as famous as your studio, but it's almost there. So talk to me. What you got going on? I love the fact you got Ted Tozer. You got Hutch coming. I love Hutch. The guys at Angel Oak, they're just incredible people over there.
It's great to see. It's great to see actually them coming back. Great people, great organization, and we're glad to see that. We're glad to see people are starting to get a little excited about the limited non-QM products that are coming out. Yesterday, I don't know if you caught it. We had Quantic Bank was on yesterday, and Quantic Bank, another a very niche player. Some of the things that you hear, actually, it sounds like, wow, that sounds like 2008. But when you hear actually the very low LTVs that they're looking for, and you hear actually some of the safeguards that they put in place, it's nice to see actually some of the creative lending coming back.
Well, I love that, the fact that you're able to find and source, I guess, new players or new entrants, or maybe people that others don't know about and have been in the business for a while, especially in the non-QM space. They need as many options as possible right now.
Yep, I agree 100%. So looks like where he goes. There he is.
Hey, brother.
Hey, so it's good to see you. Good to see actually this shot. So by the way, I mean, and hopefully you're following Kevin on LinkedIn, because Kevin actually, what I love is, Kevin, you're like a little bit of you have Barry Habib and actually secondary marketing. Like you do actually so much, and you're able to break it down to what an originator needs to know. You're speaking from the C-suite, literally. And between actually, I love the fact actually, that we get to hear your experience in a way actually that we're able to easily digest it. It probably comes from your roots in the mortgage business.
Yeah.
I mean, which,
Thank you for even bringing up Barry in the same sense as me. He's a great friend of mine, and I'm a huge fan of what he's been doing. I got in the business in 2001 as a wholesale account executive. And, Barry was, the mortgage market guide. We subscribed to that back in Austin, Texas. And so I've always followed his material. I love candlestick charting. And, so I appreciate you bringing me up in the same vein as him. I'm just, Andrew, I've known you a long time. I mean, I've being on the wholesale side my whole career to start, and then really get into retail in 2007, and then joining PRMG in 2010, and then building up all three channels, a correspondent, wholesale, and retail channel, together with the great leadership and the two founders of PRMG, Paul Rozo and Robert Holliday, who I just saw Robert walking by. It's been a ride, and you've been there, every step of the way. I'm a road warrior. You're a road warrior. You're at all the shows, and we always stop and chat and BS and pick each other's brains and see what's going on. And you've been a part of building the community. And so, when you asked me to come on the show, I was pretty happy to do it. So I appreciate it.
Well, listen, I mean, and one thing I got to say that's amazing, but by the way, like, we got to acknowledge, Max Master just shared this. Kevin, bar none, is one of the most singular influential people I've met within the industry. Cheers to
Max. Cheers.
Amen.
Cheers.
Amen. That's
it's water. Don't worry, it's just water. I don't know what Andrew's got, but thank you. Appreciate that.
So listen, I want to go back actually, into your career, because, you were not destined to become a mortgage banker. You started out in school in advertising, right? I mean, if you went to school to be in advertising, later on, actually, you were involved actually in sales at Dell. Your family backing has nothing to do with, with the mortgage or finance business. And here you are actually on and it's almost a daily basis. You were doing this actually as a weekly update, but, having thousands of people listen to you on LinkedIn, sharing actually, what originators are seeing, what, capital markets are feeling, and, what the C-suite executives are doing to help inspire the company. So, I mean, take us through actually a little bit of that journey while I try to actually get some people on Facebook to join us here.
Sure. Hey, Joel, good to see you, brother. Your dad is a freaking legend over there. So thank you for everything you've done for the industry too. Andrew, I don't know how much, people want to talk about, me and my big ugly mug and my big nose here, but I'll try and just answer your questions. I'm just a normal dude from Texas. Born and raised in Dallas. I went to school, University of Texas at Austin, go Longhorns. And man, I just think what's great about our industry is if you work hard, opportunity will present itself. And I feel like, the harder you work, the luckier you get. And so I feel very blessed to be in this position that I'm in, to have run into people in California that started this company the same year that I jumped in the business. And for us to cross paths the way we have, and then for Paul and Robert, to afford me an opportunity to really, become an owner and become a partner in a lender and then help it grow. And so, there's just so many stories like mine in this business of people just working hard and creating opportunity. And so that's, look, yeah, I didn't know what the heck I was going to do in college other than, I went to University of Texas at Austin. It was the best school in the state, my opinion. Probably born in fact, but I felt like whatever that would lead me to, I would go. And then I went in liberal arts undeclared, mostly because I didn't know what the hell I wanted to do. And then after I didn't have a lot of money, so I joined like the cheapest, most party animalist fraternity house that I could afford. And, borderline, got my first D ever, and so I'm like, well, I guess I can be an advertising major there. That sounds kind of cool, So that was fun. But yeah, I mean, I just, it's interesting. I didn't really know what the heck I was going to do. I just ask questions, and I kind of get nosy, and I see what's going on and find opportunities, and I'm not afraid to try new stuff. And so I think that it's really cool about our industry is it really affords you a lot of upward mobility, a lot of unique things. Any itch you have, you can scratch it. Anyway, it's just that's probably all that really is relevant for me to talk about myself. As far as the LinkedIn thing, it's interesting because there's another similarity to my college roots, and it's just kind of one of those things where like I try and listen to people. I mean, I do talk a lot, but I try not to overtalk people. And so, especially women, because, I don't want to be deemed as like, some kind of old school, masculine thing. I try and be very cognizant about, trends in our society and things that, people are gravitating to. And so when I listen, sometimes I hear people say stuff that, you'd be shocked to hear that, like, if I told you I was president of my fraternity, like right now, probably looking back, you'd go, oh, well, that makes sense. Yeah, of course, you were probably destined to be or whatever. Honestly, I had no desire whatsoever. I just wanted to have fun and study, but people would come to me. And so then I would just listen to people, and then I would just act. I mean, people are like, you're running, right? And so I was like, yes, I'm running. So what was interesting is the LinkedIn videos is a very similar thing. When all this shit started hitting the fan the first week of March, I remember I was at the AIM Activate show in Irvine, and everyone was talking about, how low interest rates are and all the margin calls that lenders are having to make. And I was just getting so many questions from all over my colleagues in the industry, from being in different groups like Lenders One and Mortgage Collaborative. And then, of course, I'm in Mortgage Bankers Association. I'm a participant in NAM. Of course, I was at that AIM event. There's brokers there. We have a huge retail channel here with tremendous amount of professionals at PRMG, 1,100 LOs and growing, plus all the 200 processors and LOAs. And, we're pushing, 2,200 employees here at this company. People just keep coming to me, asking me questions. So it's kind of like out of necessity. It was like, I'm responding to people asking me, for advice, or what do you think? Or, is government lending going away? What the hell happened to non-QM? When's it coming back? Why am I seeing awful rate sheets? This lender over here has zeros across the board for 3.75 interest rate and higher. Why is that? And so, I mean, I had my own lender before I joined PRMG, a very, very small lender, but I had some experience during the crash, during the Great Recession. So, I've been through, some crap, and we have a huge leadership team here. Gary Malice is an absolute beast. You've had him on your show. He's our chief. He's my partner in the company, chief strategy and capital markets officer. And of course, Paul and Robert, the CEO and COO. We were going through a lot of stuff, and people just kept coming to us and asking us. And I'm like, I don't want to kind of blow anyone's, mind here or let anybody down. But I was like, if I just put out a video on LinkedIn, it'll save me like 4,000 conversations every day.
Yeah.
And it's a nice way to get some information out and over communicate. And I think, in an era where we're on social media right now, if you look at, it's funny, I was just, we have biweekly, we have our regional managers on the retail side. They have meetings, the regional managers about recruiting and what's going on and trends and whatnot. And one of the things I was talking about this morning, I'm bringing up right now, is like, look, think of how much time you have your eyeballs on stuff during the day. Like just add up like anything not work related or not family related. Okay, so some people are better controlling this than others, but think about social media.
Yeah.
LinkedIn, Facebook, Instagram, TikTok, if you're into that. I mean, you could burn an hour in a heartbeat on that, right?
Very
Television. Do you listen to podcasts? Do you read funny emails from your friends? They send you memes about what's going on in the quarantine. Add up all that time, and I mean, it's hours every day, hours upon hours every day. So for me to shoot like a 10-minute LinkedIn video, or if you're in the audience right now and you want to, make a phone call or send a blast email or do a video and send it out or put a couple posts a day on Instagram, people are consuming this stuff. They want to hear it, So this less is more. Everything has to be pretty and polished and all that kind of, jazz. Like that's not marketing anymore. This is not what it is, not in this modern day and age of information. So that's kind of where it all came from. I just started talking, just some dude with his, webcam and just rambling, at the seat of his desk. And so, it's any one of us can do that, to be honest with you. And I guess my perspective is unique. To be fair, I'm not trying to, be naive to the fact that, I am an owner of a lender. We're growing. I'm over 3 channels on the as far as management, but I have my hands in all kinds of stuff. People don't talk about margin calls openly. People don't talk about cash constraints. People don't talk about prepay speeds or how to deliver into the secondary market. Why does a rate sheet look like this? Why did this program go away? It's like there's this, like the leadership and this kind of old school mentality, the suit and tie mentality, the banker mentality, the true bankers, the guys that wear suit and ties. Those are bankers. And that mentality of not full transparency and not being open and honest and not talking about strategy. I think when I talk about stuff like that openly and freely, I think it resonates with people, and I think it creates a level of trust. I'm not trying to sell anything to anyone. I don't care if I have 1 listener or, 15,000 on any of my videos. I literally don't care. Someone asked me for help and I give it. And it's more of a humble, like a humble servant, attitude. And so that's just kind of my thoughts on that. And, I hope that's a good monologue for you and we didn't lose too much of our audience.
No, it's growing. It's definitely growing. So listen, but I got to say, I agree actually that, you don't need much to actually make a big splash on social media. And if you are an expert and you know something more than the people that you're listening to, you are actually good. You can share that. I always actually I love this phrase: in the land of the blind, the man with one eye is king. And there's a lot of information that you have that has gotten actually, to the ears of the originators and gotten there fast. And normally those conversations were just held, between the C-suite executives, and the things that you shared would not make it down to managers or originators, let alone go to other companies. So, and I know you always say this all the time, that this is not meant to be actually a recruiting tool. And I know you. I know actually your personality. I have 100% sure that is not the case. But I gotta say, to me, actually, if I'm out there and my company is not telling me anything, and I have actually a leader like you who is open and sharing and saying actually the good and the bad and the ugly. It makes me actually wonder, should I be working for who I'm working for? Maybe it's not working for you, but maybe I should be considering working some other place.
Well,
so
I like the analogy of the one-eyed man. It made me think of one that's because all the craziness we went through in March and April, in the land of the shit, the man with the biggest nose smells best. So I just made that up, by the way. You can use that. So
that's great.
It was crazy. March and April were absolutely crazy, and it was just people wanted to know what's going on. I want to really accentuate this because you didn't ask me to come on here and talk about PRMG and
no, that's wrong. I did. I want to talk about your stellar month. But okay, continue.
What I was going to say is I've had countless people reach out to me on LinkedIn and send me direct messages, and I've had conversations with people, and I've really tried to keep it, above board and say, when I talk to people, I had a conversation with someone that everyone in the industry knows yesterday, and I'm telling this gentleman, well, this is, if I were you, this is what I would do. if I were in your position, I would do this right now. I could have steered that conversation into trying to recruit him, but that I didn't do that because, I don't do that. When people aren't looking and people ask me about career advice, a lot of times I say, you know what, just try and address the issue, with your leadership, no matter where they work, what they do. And so, people come to me for advice and I'm happy to give it. I'm not, again, I feel like there's an abundance of business out there. We did do 1.3 billion last month as a company. And I feel like, that's a speck on the ass of this industry. It's nothing. I mean, it's literally nothing. But obviously for us, we're super proud that we did it. I don't want to take away from that moment, and that milestone, but it's like, okay, nobody cares, work harder, so what's next? What's the next milestone? There's going to be 2.2, 2.5, who knows? We may flex to $3 trillion in loans this year. Every single person listening right now can double their production. Every single person here in this industry right now, in this time, can double their production in 2020 over 2019, 100%. And so, or triple or quadruple, it's all out there. There's that much business depending on where you're starting from. So, I just, so it's a great milestone for us, but I think there's a lot of companies that had a better April than they did in March.
Yeah.
Because the business was there. I mean, how could you not have a better April than March? Rates were insane in March, so everyone grew. So it's like, it's tempered excitement. I'm happy for our team, but I know everyone's doing well, and some are, are achieving higher goals than other. But again, there's plenty of business and plenty of winning to go around.
Yeah, and listen, and you guys must be very confident about the future because not only actually you're doing that fine, you're hiring more. So from what I understand, actually, I know you your last LinkedIn video, you're wearing a suit. You hired 100 people, right?
Yeah, we on the first the second Tuesday of every month, we have a orientation for new hires, and that was yesterday. And then if they're on the retail side, if there are any branch managers that were hired, they stick around for today and tomorrow in what's called Branch Manager University. So it's just something we do. It's a set training schedule. We do it every month. And typically I do the closing comments at the end of the day on Tuesday. And I let people, understand who we are. There's some stuff that get in the weeds would be boring for us to talk about right now. But, I basically say like who we are. I mean, we're a privately owned company, and, we're not a hedge fund backed company. I mean, you're talking to one of the owners, right? If you work for a company that's backed by a hedge fund, you might see the CEO who was planted there by a board or a hedge fund that you will probably never see, and you have no idea what they're thinking. Now, of course, decisions are made, and that is kind of indicative of the people that you don't get to see or even talk to and their thoughts. And not all equity firms and hedge funds are the same, although I will say they do manage from a return on capital type of aspect, so I will just say that that it's being at a bank is a different vibe. They all serve their purpose, and so what I always lead with is like, look, there's two guys that founded this company. We're built by originators for originators. So that means any originator that wants our help, however they want that help, we will do everything we can to serve them. And we have non-QM, we have second liens, we had jumbos, before the secondary market went through everything. We try and go down to low FICO as possible, 550 on manual underwrites. We try and help people say yes, and that's our mission. And it's a very hard thing to do. And so, anyway, that's who we are. And, we don't own our own technology. We're on a Compass and we're working that ecosystem. We don't have billions of dollars behind us, serving the portfolio, and the portfolio, and retention means everything, means more than the originator's experience, not that that's always the case either, but who we are, we embrace it. We're originators, and this is our job, and this is who we serve. So it's nice to know that message still resonates. Remember, before this happened, before some a-hole in Wuhan ate bat soup, if we believe that it didn't get leaked out of a lab at this point, we don't know what it is now, but If we remember, people were worried about fintech disruption. Like,
Yeah.
how is automation going to come in here and wipe all the originators out? And all these different models that come in. You've got iBuying, you've got commissionless LOs. You have technology where click, done. So that was the big fear before. But I think what this health, I guess, crisis, if you will, and the recession that we're in, I think what it's shown now more than ever is people want to talk to a local originator. They want to talk to someone in the community, not on a headset, not far away, not a computer, not a self-service platform. They want to talk to someone to help steer them through this mess. And think of all the questions on consumers' minds right now. There is nothing better for a consumer than a local originator at any level to help them with their needs, and then get them paired up together with a local mortgage professional, real estate professional. I mean, that is coming out. That is showing now more than ever. And so anyway, I just this is a little rant there on who we are. I saw Jenny. Thank you for the shout out, Robert. Appreciate that. Villalon, my old buddy there in Fort Lauderdale. Yes, good to get the billion. Sorry, Evan Wade, that you don't know what Android is yet. You'll get there someday. I'm gonna make the comment here. So. I think actually, you are one of the few actually, top leaders of the mortgage industry that actually uses Android. I don't know what it is. It's just it's an interesting thing. That's okay. I'm with Evan on this, but one day you'll see it. Actually, we'll get a text from you, and it'll go from green to blue, and we will celebrate. Oh my gosh. The green to blue, the laughed at, loved, emphasized, laughed at, loved at, like all the crap I get on text messages. Look, full disclosure, I am a proud stockholder in Apple since like 2004. I hope one day I can retire off that stock, although I have 4 kids now, and that's probably at least pushed off another 18 years. But I mean, look, it's just a different platform. It's what it is. And, I like to be contrarian. I mean, part of what I do is I don't like to do what everyone else is doing, and sometimes taking the road less traveled by makes all the difference, right? So that's always been kind of one of my things, is to look what is everyone else not doing, and why. And anyway, just another little nugget there.
That's great. Yeah. So Kevin also doesn't brush his teeth. Everyone brushes their teeth.
I do brush my teeth.
That's right. Just a bad joke there. So listen, let's go back actually. What was since March? What was the darkest day? What would you feel like was your darkest day? And do you feel actually that was the end of the dark days, or do you think we have darker days ahead?
Well, I mean, to be fair, I mean, look, just from our perspective, I don't think we ever had a dark day. So we have a very experienced leadership team here, and we've been basically going through. We didn't think this was as bad as 2008. So we coming into the housing industry, that this recession with a strong housing industry, the financial sector was strong. We've got great capital partners. The companies we have warehouse lines with and who we sell loans to. Yeah, they took a break, but what can you do? I mean, I think the only thing that was really really unique was that Fannie, Freddie, and Ginnie MSR values went to 0 or negative.
Yeah.
So look, non-QM went away, right? Like dealing with the margin calls, that was no big deal. We dealt with it. It's what it is. You play in the game this long, you just gotta have, the ability to go, look, our entire February locked pipeline is now out of the money, but our pull through is very good. We have a very sticky platform. People don't flip on us. Obviously in retail, they don't, and so, we're going to pull through our loans, and I would say our broker partners and our correspondents did a pretty good job of that as well. So, we have a loyal base, a loyal following. So look, we just pull through our pipeline and, then lock new loans at lower rates, and we'll get our margin money back. That's the game, but I think if we didn't have Gary Malice and his team, and we were maybe a less experienced capital markets team, I think it would have been darker, because at the end of March, people realized, like, you can't deliver to these same 2 aggregators you always did, or you can't delivered to the same two banks you always did in a co-issue or bifurcated. You know, you don't have a diverse execution model, or maybe you don't have Fannie or Ginnie or Freddie set up and you can't sell to the cash window and service. I mean, if you weren't diverse and had all those different executions, it was pretty dark for you as a lender. We didn't have that problem, you know. So, but it was interesting to see when the forbearance policy, you know, after non-QM went away. Okay, we understand non-QM went away. I mean, you have someone literally one day out of foreclosure can get a loan for like $2 million, right? So there's an old adage in the industry, like if you have $100,000 loan, you have a problem. If you have $1 million loan, the bank has a problem. Okay, so imagine all these banks buying securities or all these non-QM lenders loading up on. I mean, the average loan amount for non-QM, people don't realize, was like well over $680,000. I mean, some people, you know, depending on where you're based, it could be $750 or higher if you're California based or you know, somewhere in the Northeast. So you have these loans that literally are one day out of foreclosure, one day out of bankruptcy. And look, yeah, they're putting 20% down or 25% down, but you know, no one gets into the business of lending money out there and then it not paying. It's just a pain in the ass. So that dried up super quick. And then people start looking at the next bucket down. You know, FHA, thank God, is there, has been the backstop for helping first-time home buyers. And that includes people who have damaged credit. I mean, you know, there are lenders out there still going to 500 FICO. You know, is a 500 FICO borrower, are they the best bet? Are they the best bet with your money? You know, look at Chase did. I mean, JP Morgan Chase said, we're not lending to anyone below 700 FICO. And 80% is the max LTV. That's it. Like you can't even use their warehouse facility to lend on something like that. In case you bought a loan and put it on your warehouse line and then tried to sell it to someone who didn't want a 699 FICO score on an 80% LTV or an 81% LTV with an 830 FICO score. You could not sell that loan using that warehouse line. And so what was interesting is a lot of people that buy loans were basically saying, hey, look, you know, we're just going to give you zero value for not only government, but now also Fannie and Freddie. Now, that had a lot to do with the forbearance policy because the CARES Act basically said no documentation, just come out and you get a free lunch for 12 months. And there's a lot of uncertainty around that. Like, oh my gosh, you know.
So that wasn't scary. That like when that happened, and especially, you know, listen, Ginnie Mae said, no problem, we got your back. But, you know, where FHA just didn't seem that didn't seem scary at that point.
Well, hey, David, yes, where there's chaos, the chaos is a ladder. David, nice quote. That chaos is a ladder. That's from Littlefinger for all you Game of Thrones fans. But, you know, look, it was a ladder. You know, it wasn't scary for us, Andrew, because, you know, we could just service our own loans. You know, we could just sell to the cash window and build up our book. So here's why it wasn't a scary thing for us. Now, if we didn't have the ability, I mean, if Paul and Robert didn't have Fannie and Ginnie approvals for years before, I've only been, this is my 10th year at the company, but as a partner and at the C level, I'm over 4 years now. Long before I got here, we were selling and servicing loans. I see headlines and some brilliant marketing like, hey, we're all going to service all our loans now. Yeah, because you have to, because no one's buying any loans right now, right? We've been, you know, but now you have to learn how to service. You've never serviced before. So we've been servicing for years, over a decade as a company here. So for us, we're like, okay, well, we have a small book now. So our exposure to forbearance, we feel is small because our existing book is small. We've been through forbearance before because we have hurricane territories like Florida, where we get a lot of business from, in Texas. We've been through that. So we know how to deal with the forbearance. And a true 12-month forbearance where like the house is damaged, right? And so, you know, defaults rise and we start modeling for those defaults. But then we put the clamps down on the new business. So the new business is like, look, we're pulling verification of employment within 3 days of disbursement of funds. We are not doing deals for someone that's going to go into forbearance. It has no job, has a loss of income, or is on furlough. You know, either they qualify with the income they got, or they can wait till they get back to work, and we'll do their loan later. And so, you know, and thankfully every lender out there went the same route. But we felt really confident in our control measures on new loans going forward, that we were like, all right, well, if all these aggregators and all these banks and all these different executions, they want to give zero value for the servicing. I mean, we know that servicing doesn't have zero value.
Yeah.
I mean, you know, in March, conventional Fannie Freddie loans. So there's something called the servicing multiple, right? The multiple was -4 in some cases. Okay, so like if there's a 25 basis point servicing strip in a loan, like you would have to pay a point to sell a loan to certain
crazy
lenders.
It's insane. And plenty of people were doing that just so they can cycle their loans.
So I have a 60% LTV with a multi-millionaire slam dunk refinance who wants to take advantage of the greatest rates in the history of all time. I got to pay someone a point to do that? Yeah, no. So, and so we just navigated through that. And, thank God, Gary and his team and his capital markets team and Angie Roman, who runs secondary, we have some really fantastic people here who helped us navigate. And we felt really good about, our ability to navigate. And I'm not acting like what we're doing is unique. I mean, every lender had to do this. Now, what's cool is we've noticed that, we basically noticed that the servicing multiples are starting to come back. There's been some bids from the aggregators that are less offensive, even last week and the week before. Even conventional multiples are, around that almost 2 bucket. They need to really get back up to 4, 3 or 4, and like we're not desperate to sell off a loan because we have all this MSR sitting there. It's cash tied up. Like we're operating, we have cash and we're operating, we're working. So we feel good about it. But yeah, I mean, if there was something that, to use your word dark, it was, were we going to have the credit markets seize up on Fannie, Freddie, or Ginnie loans? Thank God the Fed stepped in and bought mortgage backed securities. They overbought it first and, really spun everybody out of control. But then, they started to back off their purchasing and are still backing off, and you're noticing rates coming down a little bit. Yeah. So that was probably the part for us. We're like, man, where's this going to go? I mean, do we have to hit pause and not lend because, there's no credit market? But that never happened, thankfully. So for us, we felt really good. I don't want to be overly confident because there's things that happen that you can't control and you just roll with it. But we felt really good about, we're serial savers here. I mean, we've saved our cash and our money for years, literally for this event. Like this is exactly this. I mean, if you look at here's the analogy in the stock market. Why is there 33 million jobless claims in 7 weeks, 20.5 million people on the unemployment report last Friday, 14.7%. And I look at the stock market, the NASDAQ was up 1%. The NASDAQ was up 1% over the high of all time last week. Why is that? Because you have Microsoft, Facebook, Amazon, Apple, NVIDIA, Netflix, Alphabet, Google, whatever you want to call it. They saved their money. They've got tons and tons of cash, and they saved their money. Lenders that save their money are doing well right now. They're reaping the rewards right now. Now, some people save their money and they thought that they were going to be good for an event like this, but then they didn't know they had to front all this money for forbearance. So to your point, Ginnie Mae did a good job of saying, you know what, we're not going to dip it, make you have to dip into that. We understand that this is a crazy, epic, health crisis. So they created a liquidity facility for some Ginnie issuers if they need that. We didn't need it. Ginnie even says this is a lender of last resort. I think the first month in April, there were only 3 takers. And I believe the interest rate was something like 6.2, I don't know, 6.23%. Maybe it's going to be 5.7%. So you can borrow money. It'd be nice if the FHFA pressed the easy button and said, look, if you're doing Fannie Freddie loans and you have to front all these payments for these borrowers going to forbearance to make the bondholders good, we've got a credit facility for you too. It'd be nice if they did that as well, even if no one used it, just to say, here you go. That would totally, the rate sheets, instantly would get better. Everyone would start buying, rates would be better. We'd be crushing it right now, even more than we are. I don't know why our housing policy doesn't want to do that. I think I don't know why we don't want to get it going. I don't know.
You know something? It's maybe there's only so many moves that they could make, and if you do everything, then what are your moves? Like if you bring out the Fed actually goes down to 0, you can't go negative, or you really shouldn't go negative. So it's maybe just keeping something in the pocket. So if you have to come out with that, and also we also have to reboot. So our economy needs to reboot, and we know housing is going to be the thing that's going to pull us out of this. So listen, I got to ask Kevin. So, and we'll ask Brian's question, leave it up there. Give us a second, Brian. But this just popped in my head, and I gotta know this. So, the stuff that you share on LinkedIn, generally speaking, this is a lot of cases, but it's not proprietary information because it's news that's out there. But the ability to gather it all and to share, actually, what you're hearing from guys like Gary who are paying attention to capital markets. So does your partners, did they ever give any kind of pushback and saying, hey, listen, like this is stuff that would give us a competitive advantage over the other lenders out there? So was there ever a point that they said?
Not even one time have they said that. I mean, we're in the mortgage business. Okay, look. So when Rocket Mortgage came out in 2016 in the Super Bowl ad, that was a competitive advantage, right?
Yeah.
Right. But you know why they got that? Because Fannie Mae gave them access to day one certainty before every other lender. So because they have a big balance sheet and they're a big player, they got played favorites, which sucks for all the rest of us. But now all the rest of us have day one certainty, although the ability to use the job and verification has been pretty much cut off because no one, you could do it 10 days out and then someone loses their job and then go into forbearance. But any one of us as lenders, we could go out and build out with that same technology and build our own Rocket Mortgage. And if we wanted to, we could spend millions of dollars on advertising like they did. We could build a call center with a bunch of little dudes on a headset in Detroit. Like we could do the same thing. Yep. So I'm not hating on their model, but when someone does something and it catches on, then everyone can just mimic it. Like there's nothing fancy or special that we do other than have the people that we have on our teams and have the leadership that we have on our teams and put it all together in a team atmosphere. That is the secret special sauce. And company by company, it's different for each company. And I'm not going to sit here and say like, oh, we're the best, like we're the best leadership out there. I feel we're pretty damn good, and I think people, who come over here, just to tout ourselves, we're a pretty sticky platform, right? I mean, look, we're not perfect. We make mistakes. We don't do things, like we don't make everyone happy 100% of the time. None of us do in this business. On our retail side, we actually ran some numbers out of every single retail lender at the branch manager position for the entire year 2019. We had the least attrition, the least amount of branch managers on our retail channel left here than every other company. Now, that's a stat. That's actual math. That's actual math that we ran and did the data. Now, this is the first time you've heard me say it. I could be saying that every day and pounding my chest or whatever. But you know what? We pick and choose our spots. Like that's not our thing. What I will say, my CEO, he did give me one pushback on my video. He goes, do you have to say what time it is when you do it? People were worried like
1 a.m. Yeah, I know.
Like, oh my God, it's 3 a.m. Are people going to think like we're going out of business and things are crazy? It's like, I'm a night owl. Like I am who I am. I it's what it is. I don't sleep much. It's who I am. And for, some people think it's crazy. And, my Aunt B is a night owl. She's up messaging me. I see guys like Anthony Casa messaging me late at night. Then there's the morning shift, then I got people like Steve Levine, who's just an absolute beast out east. He helps all of our branch managers on the retail side really make money. He's up super early, and then I got wholesale AEs that are late night owls. I mean, we got all, it's just fun. It's a community. And that's the only pushback I've really ever got.
That's great. So you touched on something that just really it's always amazed me. And actually I was talking with your Paul Aceto about this, about how one thing that's so unique about PRMG and specifically, so you mentioned Anthony Casa, so he was just in here. And one of the things that you'll find is that the brokers and the pure brokers, like the brokers are, the brokers are better. Brokers are the only thing. They love PRMG just as much as the distributed retail that you guys have. Like, how is it possible that you are able to have a company that is loved so much by both channels? I mean, what do you think actually it takes to do that when, it's so hard to do that?
Well, I think, again, it goes back to who we are as a company. Our two founders, Paul and Robert, were originators. Okay, so origination is origination, right?
Yep.
I mean, you're taking the heat. You get no glory. You give it up to the team. When things don't make a closing date, you're the one that gets to call. You've got the realtors that tell you, I'm never sending you a loan ever again. And then, of course, they do anyway. I mean, being an originator is not an easy job. It's a lot of work. And it is like every month you have, all right, now let's do these loans. Okay. So we are built by originators for originators. So we put the originator first. It's not built by the portfolio for the portfolio, built by ROI for ROI, built by the bank, built by the hedge fund, built by retention. Like, for us, it's if we focus on the originator and because we have that in our DNA and we serve that purpose, then there's enough business to go around. But if you want to run your own broker shop, okay, and you don't want to control underwriting, I'm not saying that that's a bad thing. I'm just saying, if you want to just focus on your business and you're an entrepreneur and you want to run your business and you want to have the optionality to go to whoever you want, that's your deal. We have a wholesale channel for you.
Yep.
Maybe you don't want to do that. Maybe you want to be in a retail channel where you feel like, hey, I really like this branch manager and their processor and their in-house underwriter that works with just my team. And I feel like I can come over here and gravitate to this and I get to just focus on origination. I don't have to do all that other stuff. And I can scale my business. There's a channel for you. Our correspondent business. Let's say that you're a wholesale broker and you want to take it to the next level and you get a warehouse line and you want to put your ass on the line and deal with all the stuff that you just dealt with in March and April, by the way. I mean, think of how hard it was. It wasn't easy for any channel, but if you want to do that, we'll serve you as an originator there too. We really don't care. So, we're here to serve origination, and there's plenty of business to go around. And so, that's how you navigate it. I mean, that's just how you do it. I mean, I don't, look, I'm not, I like the word better because you're comparing yourself to something else. As long as you don't use the word best, because I don't think anybody has the right to say that, because this is such a gray area of business,
Yep.
And so, anyway, just to answer that question. By the way, Brian Campo, about your question about VA. It's interesting. Like, the veterans, they actually have some of the best loan performance, if not the very best loan performance. Even now, I saw some delinquency reports out yesterday. VA is not really ticking up. My guess.
Better than USDA?
I think it is actually, but I don't know. I didn't see that stat, but it's always traditionally one of the better performing loans. There's like a sense of duty there with veterans, like, I got this benefit that I earned through serving our country. Yeah. I'm not gonna get sideways with that. It's like an honor thing, And so, but I think in this time where the secondary market's been so disruptive, the fact that it's basically zero money down, it's 100% LTV loan. I think that is deemed as more risky. And so that's probably why. And I also think it depends on the FICO score too. So, loans under 635 really don't perform well compared to loans over 635. And that next barrier up is really about 680 on the FICO bucket. Thank you, Paul Lucido. He's our chief marketing officer. He gave me a little shout out there. He's working his butt off and working really hard and really trying to push our messaging. And, he's been in this business a long time. He and I worked together. For me, 2 companies ago, when I got my start at First Magnus, he was marketing for the West Coast division. And so it's great. He's right down the hall. I don't know if he's here today, but he was yesterday. But yeah, great guy. Thanks for the shout out, Paul.
Yeah, that's great. So, and out of your multi-channels that you have going on here, do you think that any of the channels is better positioned in the recovery? And I know it's hard to play favorites because like, do you feel actually that there's one channel that is going to do better than another channel as we go through the economic recovery?
I mean, to me, that's like bigotry. It's like it's like saying like this race is going to do better at this thing than the other. I think that there's so much business in each channel. I think the better leaders, the better originators, the better groups are going to thrive in the channels that fits their model better. Every model is different. I mean, I know people that go out and put up a fantastic website by Lead Pops and Andrew Pollock. He does a fantastic job. And then they have, a company like Verse.io, answer all the phone calls. And then you just stand up a website and do a bunch of leads. Okay, that's cool. If that's your model. And then there are people that, spend the time and the money and the education, and they go to realtor shops and they do seminars, and they really deeply root down in the community, and they need a lot of support to help them do that. That takes time. You need someone to backstop you for money. You're not hurting for money. And so, maybe there's a better channel and a better leader to support you for that. So, maybe you're a reverse mortgage, a HECM person. You want to go work at a HECM lender. I mean, we're building a HECM division here. We've got great products for that. Maybe that's your model. I mean, it's just like, every model is different and every person is different. It's just like it's basically ignorant to say that an entire channel is 100% better than another across the board all the time. There are things that certain channels do better than others. And I think we're past all that. I think people have really chosen their lane, and they've really chosen, what really works best for them. Now, there are people that, sometimes they want to make a change and they want to go one way or another. And look, we have 3 channels. So we're here to support all 3. So I have to be like Switzerland anyway. I can't sit here and say that. That's not,
well, I here's one indicator. Those 100 new hires, are they all channels, or are they distributed towards one channel more than the other?
Well, you don't have to hire for wholesale other than underwriters. So, so most of our hires on any given month are loan officers. That's typically
that's fantastic. That's huge.
Yeah, but most of our fires are also loan officers. Yeah. So, we have a very so our model is is very different. Like we have a platform we work within. We have 6 different points of sale that you can choose from. Okay, in the retail channel, we have a CRM of record, but then we have LOs that use multiple different CRMs out there. We don't say you have to use this and this is the only way. So there's optionality within our retail channel, right? And so, but the pricing, you start off, your pricing isn't as good as what the very best is out there, because you work for a branch manager that is building a team that requires revenue. And so whether that's the processor, who might be a badass, or an underwriter, or marketing, or whatever it is. And so again, that model works for certain people. And then of course, you've got all these branch managers that we don't tell them who they can and can't hire. So this guy was a CPA. He's going to call all of his past clients and we're going to do all his loans. Well, it turns out the CPA is a pretty crappy loan officer. So that guy was in orientation yesterday and he's gone in 3 months, So, I mean, it's what it is, So, but yeah, we're all 3 channels are growing. All 3 channels are doing well here. All 3 channels are working together. We have calls with all 3 channels on the phone together. We have, a different, it's just a cool vibe here, and it's who we are, and it's not for everybody.
So and I know Paul has been going to the office. I know, you and your partners have been in the office. Do you like this, this new norm of not seeing people, can you actually sustain this? Or do you think actually, or you want everyone to come back into the office?
Well, I mean, I would prefer it how it was. It's not going to be exactly the same, at least for a year. I know that for a fact. We all got our masks, and I'm in California. We've been in lockdown since basically the first week of March, or the second week is when we really started here. We actually, the Monday before Governor Gavin Newsom had a lockdown order on that Friday, the Monday, we had already told our employees to start going home. So, and then we had a record month in March and then another record month in April. And so, of course, you're like, well, why do we have all this space? Why do we have all this? But, you don't want to lose that sense of camaraderie and that sense of urgency. If you go shoulder tap someone, there's some advantages to that. So, I don't know. I mean, we haven't made any drastic long-term decisions other than for the month of May, we're still, everyone's working from home across the country. I mean, there's no vaccine. There's no vaccine. It's not coming this year. It may get invented this year or something might test positively this year, but it won't be mass produced. We're going to have, economy's going to reopen. We're going to have hot spots that flare up, and then you got to do mass testing really quick and maybe do some tracing and try and isolate people if you're at risk over 65 or morbidly obese or a lung or heart condition. You're going to need to, be careful. and maybe you need to stay at home. So, I'm on the road 50% of the time. So I'm a trade show guy. I go to conferences, I go to seminars, I network. I like doing that. I get a lot of information out there and meet a lot of people and create opportunity by doing that. And so for me, it was nice to just chill at home for a little bit, like forced to not be on the road. I haven't got like the full blown itch to get out yet, which is a little scary because it's kind of like, okay, are we all now forming this habit of not traveling? And so now, maybe when we open back up again, I'm like, you know what? I don't really know to go. I don't need to go to that conference anymore. I've been to that one a couple of times, and there's a little fear there. So so a lot of habits have been formed. E-commerce, shopping online, all that kind of stuff. So anyway, I'm not 100% sure. I do like human interaction, so I missed that part of it. Zoom happy hours is not cutting the mustard. So I would like to see my coworkers and our work family, and then my extended family throughout the industry, the community that we've built. I would like to see some faces. It would be nice. High five, shake hands, get some hugs, have a toast. We made it. We beat the bat. We beat the bat virus. It'd be nice to do all that kind of stuff.
Maybe not shake hands. Maybe fist bump, bow. Maybe this shaking hands.
The big elbow.
Yeah. By the way, so if you're not following Kevin on LinkedIn, you can use that link up there. That'll be able to connect you. Hope you don't mind me promoting your LinkedIn page up there, but please connect with Kevin. I think actually you were initially doing this as a weekly thing, but you're just doing this as needed. It seems to be.
Yeah, pretty much every day, Monday to Thursday, and then I'll try and do a weekend walk around Newport, throw some scenery in there, make it kind of cool and different. But I'm trying to add value. I'm not just trying to hear myself talk. Trust me, if there's no news, I'm not saying anything. I'll cut it back to 2-3 nights again. But people seem to like it. I mean, there's 240,000 people in our industry. I think I'm only connected to like 5,000 people on LinkedIn, and they're not even all in the industry. So whatever. If I bring value to a couple people, I love serving. My fellow colleagues, and so I'm happy to do so.
Robert just asked, what do you think the next normal will look like?
You are already bald, Robert, so you don't have to worry about a virus hiding in your hair, so you're good. You may have to shave, but no, I think having the masks out is going to be pretty normal. In California, people look at you dirty. You walk into a restaurant and pick up food for your family. Like, you're not wearing a mask. They're like, people will say something, And so
are people driving with their masks? I see people here in New York driving with their mask, and you can make a lot of assumptions when you see that. It's
that's the same person that goes back to your photo from 7 years ago on Facebook and likes it. I do see that, and it is pretty funny. But look, you know what? People don't. Maybe they just want to leave it on. I have a pretty comfortable mask. I don't do that like purposely, but maybe it's just they're going somewhere real quick and they don't want to. They're being efficient. They want to take it off and on, but it does look very weird. But yeah, we're you could go to Walmart, and up until a week ago, I don't think you had to wear a mask. But I can't go to the beach and be 40 feet away from the next person. Although that's finally changing. Out here, Orange County, Riverside County, Stanford. LA County announced yesterday, they're going to stay through July. They're going to stay locked down through July.
I think September. I think that's actually going through September.
People are already talking about canceling class. We have 4 kids. My wife will go absolutely nuts, and she has to homeschool a 7, 5, 3, and 1-year-old anymore next year. I don't know what we're going to do. I won't be able. You guys won't see me next fall. I'll have to work out of the house.
Yeah. All right, Kevin. I just got notified. We've been on for an hour here, so thank you so much. I really appreciate it. So everyone, please, follow Kevin. Get over. Bring that back up here. So use that link. Follow Kevin. Connect with him on LinkedIn. He's just got these videos that he's doing on a originally weekly basis, but now almost daily or sometimes daily basis. great stuff. And it's not just business. I by the way, okay, before we go, one last thing. So Bitcoin. When did you get into Bitcoin at all personally?
I did.
That's fantastic.
I did. I you know what's funny? It's like the TikTok of investing, or maybe it could end up being the Facebook of investing. Remember when Facebook came out and like everyone's like, oh, it's just a bunch of young people, and now it's only old people on there, So, it's interesting. Like the younger generation, the millennials, this is their investment. This is their gold. And they are absolutely crazy about it. I mean, and so it's just an asset class. It's a finite asset class. I mean, what is value? I mean, look at this crap I have on my desk. I mean, someone would pay me for half. Yeah, I mean, someone would pay for this stuff. Yeah, exactly. I mean,
this right here is $500 billion in what you would call it, Nigerian or Zimbabwe dollars.
Hey, it might make a comeback. You never know. But I mean, look at that. Look what happened in China. They took those paper, the yuan, and they burned it or they washed it. Like money is disgusting. I mean, it's just. I mean, if you think about it, in the time of a virus, global pandemic, like who wants to carry around a bunch of paper that you have no idea who touched it, right? So obviously there's credit cards and there's digital wallets, like your Apple Wallet, Evan Wade, if you're still listening. But crypto is finite and it cannot be printed or rebuilt. It can be mined, and there's a finite amount of it out there. And Bitcoin is the one that's by far the leader. JP Morgan Chase, they just took over Coinbase and Gemini. They announced yesterday that they will handle all the payment processing for those two, which are two of the larger digital wallets out there. So, I mean, look, if I'm sitting there and I'm like, oh, this crypto thing, it's a fad, and maybe it is. I mean, maybe it is. Maybe it's like TikTok. Maybe it goes away. Maybe it's like MySpace and it all goes away. Yeah. But people are investing money in it, and maybe it's like Facebook. There's value in Facebook stock. So I mean, look, if you've got a couple shekels to invest, why not? And then there's the altcoins. I mean, what is blockchain technology? What's it used for? I mean, the blockchain could come into our business and really change the way title insurance.
It should. It is ridiculous, actually. That I mean, if you think about it, most deals fall apart. If it's because of title issues, or credit issues. Those are things that can be addressed with blockchain. Yep. And because both of those is because humans suck at record keeping. Yeah. And record keeping, comes out of actually to play when blockchain is brought in. So blockchain technology, as Evan says, is the future because it's not reliant on actually, me just keeping proper records. It doesn't make a difference because everyone's keeping records of all transactions. So yeah, like to me, actually, the blockchain is something that's going to have a major impact on our industry. I just don't know when that's going to be, but credit and title.
Yep, I agree. Credit, title, smart contracts. I mean, yes. You enter a contract, you say this is my terms, and then someone else out there in a community full of contracts, they match up the terms. If they just match up, boom, you're under contract. That's it. Like I would like to buy a 3-bedroom, 2-bath house in San Bernardino County for $137,000 in this neighborhood. If anything comes up, it's like throwing in a limit order and a stock. Like I'm going to pay this for that. If it comes up, great, my order hits. I mean, how about in the car business? If you're in a smart contract and you don't make your payment, you instantly default. Boom, you're repo. I mean, why is there people that have to go back and forth and negotiate and get another party involved and then look at LegalZoom. You think it's like that. That's kind of a precursor for like why do you have to pay all these attorneys all this money to do something? Why do we have to pay for all this title insurance? What are they insuring? I should know from a digital ledger that cannot be hacked and cannot be broken into whether there is an imperfection on title. Why do I have to pay thousands of dollars? Other than your down payment, it's like the largest cost in a transaction. Why are we paying that? What are we insuring? It's a scam, So anyway, we could go on for blockchain for a while. I mean,
Yep, definitely. So listen, Kevin, thank you so much. Everyone, please make sure you follow Kevin. I'm going to put that up on the screen one more time. All right, Kevin, thank you so much. I'm going to take everyone out. Just stick around for just 1 minute here.
Yeah, thanks, Andrew. I appreciate you having me on the show. Appreciate it.
Everyone, thank you so much for joining us for another Mortgage Leadership Outlook. So excited to have you again. Remember, we do this every day, Monday through Thursday at 4 p.m. East Coast time, 1 p.m. Pacific time. Tomorrow, like I mentioned before, we've got Ted Tozer. Ted Tozer, former head of Ginnie Mae. He co-authored a white paper with the Milken Institute talking about private label securities and the need to self-regulate. So please join us tomorrow, 4 o'clock Thursday. Thank you, everyone. Be safe out there.